Good day, students. Welcome back to Accounting 1329, Payroll and Business Tax Accounting. We are continuing covering Chapter 5, which deals with unemployment compensation. And in this lecture, we are going to be covering Problem 512A. Okay, I am Dr. Mercado, and I welcome you all to my class. I hope all of you are finding these videos useful as I explain some of the problems. Remember that within Cengage, as you complete some of your homework problems, they have me show me how videos as well that will also help supplement your reading and all of the information provided. Make sure that you read the chapter, you review the PowerPoints, you listen to the lectures, you review those show me how videos in Blackboard. That way you get the most out of it and you're able to easily apply that to the different problems or scenarios. Okay, so let's jump over to problem 412A. Now do not get overwhelmed. There's a lot of information included here. Okay, and we're going to take it pieces by pieces. Okay, so it says the following unemployment tax rate schedule is in effect for the calendar year 2023 in state A, which uses the reserve ratio formula in determining the employer contributions. We've got the reserve ratio and the contribution rates. It says Iram Company, which is located in state A, had an average annual payroll of $850,000 for the 3 12-month periods ending on June the 30th. The computation date for the tax 2023. As of June 30th, 2022, the total contributions that had been made to Hiram's company's reserve account in excess of the benefits charged amounted to $17,440. Okay? So this is the $17,440 represents what we have on the reserve account already excluding any benefits paid. So that is what we have sitting in our reserve account at the moment. Okay? Requirement A. Hiram's company's reserve ratio for 2022. Okay, so if we look at your textbook, we have the reserve ratio formula. Okay, so in this particular section, it states, as indicated earlier, the concept of experience rating is based upon the payment of state unemployment taxes according to the employer's stability of employment. As an employer experiences a lower employee turnover, generally the state unemployment tax rate will be lower. That makes sense. The less people that claim unemployment benefits from your organization will thus cause your state unemployment tax to be lower. If you have a very high turnover, then that's going to cause your tax to be higher because what does that mean? You need more money to cover all of those benefits being paid. So the less you pay in unemployment benefits, the lower your state unemployment tax. The higher you pay or the more people that claim unemployment benefits in your organization, then the higher your rate. Okay? In all states, some type of experience rating plan provides for a reduction of the employer's tax contributions based on the employer's experience with the risk of employment. Okay? Of the several formulas used to determine the contribution rates, the most commonly used is the reserve ratio formula. And the reserve ratio is equal to your contributions less any benefits paid over your average payroll. Okay, so in this case, they've provided you with the amount, the reserve account balance, less any benefits charged. So they basically done the contribution, less the benefits, gives you that $17,440 already. So they've already done the top part of the calculation already. Okay, they did not tell you how much they was contributed. They gave you the net amount, contributions less benefits. That's what it says here. The excess of the benefits charged. Okay, so that $17,440 is going to be that number that we're going to be plugging in the numerator, and then the average payroll, the denominator, is going to be our $850,000. Okay, so we're going to go ahead and we're going to get our $17,440, and we're going to divide that by our $850,000. Okay, and let's see what that gives us. Okay, $17,440. That is how much you have sitting in your reserve account right now, divided by your average payroll. It will be $850. So currently, that is our reserve ratio rate. Okay, now it's in decimals. I want to convert that to an actual percentage. So I'm going to multiply by 100, and that's going to give me a ratio of 2.05%. Okay. 2.05%. Okay, that is my current reserve ratio based on the information provided for this company. Okay, so the formula is right there. We get the amount in our reserve account less any benefits charged, which was 17,440, divided by our average payroll of 850, and that gives us our current reserve ratio. Okay, so this is where we stand right now. Okay, we are at 2.05%. Okay, 2.05% would fall in this tier. Okay, now letter B. What is my 2023 contribution rate for the company? Well, the contribution rate based on my reserve ratio would be that 4.9%. So you're going to locate the reserve ratio that your company falls in. In our case, it's 2.05. Okay. Now remember, look at this. It's or more, but less than. Okay. So here it ended in 2.0. Our ratio is 2.05. So then that would bring us to the next tier, which is 2.0 or more, but less than 2.2. That means my contribution rate is going to be 4.9%. Okay. So if you get letter A correct, then B would be automatically correct because all you have to do is use that contribution rate included. Okay. Now letter C. What is the smallest contribution that the company can make in order to reduce its tax rate if state aid permits voluntary contributions? So there's some states that allow, you know what, this is your rate, this is how much you're going to put into your SUTA tax, okay? But if you want to put more than that, kind of like to build a fluff there in case something were to happen, the economy went to go bad, you had to let go of several employees, you can do that. Okay, there's some companies that permit voluntary contributions. Now, what voluntary contributions does is it also builds up your reserve. Okay, so if you have a lot of money in your reserve, then once you do this formula, the reserve ratio formula, that means that your contribution rate is going to be lower. Okay, so that is what companies want to do. They want to pay less SUTA taxes, and they do so by having enough money on their reserve account to pay, make sure that they can cover all of their upcoming SUTA related benefits being paid. Okay, so let's start off here. What is the smallest contribution that the company can make in order to reduce its tax rate if state aid permits the voluntary contributions? So if we want to jump from being at a 4.9%, and they're asking us for the smallest contribution. So we don't want to go from 4.9 to 3.1. No, they're asking what is the smallest. So if I were to contribute, how much do I need to contribute to go from 4.9 to 4.6? That is basically the question, because the question asks what is the smallest contribution. Okay, so the smallest contribution that we can make to jump from this tier of 4.9 to 4.6 is what we're going to calculate. Okay, so currently our average payroll is $850,000. Okay. Okay, and we're going to multiply that by, what if we were at 2.2%? Okay. Okay, we're going to multiply that by our rate, our first rate here, which is our smallest contribution, 2.2%. Okay. So 850,000 times 2.2% would give me 18,700. Okay, so we're trying to figure out here, okay, I am currently in this tier, I'm paying a contribution rate of 4.9. If I want to move down a tier, make a small contribution to go down one tier, what is the smallest contribution that the company can make in order to reduce its tax? Okay, so if we were to jump from this tier to the tier below, we would be looking at, we're going to still get the average rate of 850. Okay, and we are going to multiply it by that rate in the next tier, which is 2.2%, that lowest rate. and that will give me 18,700. Okay. Now what we're going to do is we're going to deduct the accrual balance that we have on our reserve. Okay. How much do we have in our reserve right now? Right now we have 17,440. Okay. So if I want to move down to that next tier, I need to put into my reserve account an additional $1,260. Okay. So currently, based on the amount of contributions that we have of 17,440, okay, and based on our annual salary, we are in this tier right now, okay, paying a contribution rate of 4.9. If I want to make a small contribution to move down to the next tier, okay, I will need to contribute an additional $1,260 to be able to move down to that tier, okay, and then pay. My contribution rate would then go from 4.9 to 4.6%. So I would need to contribute an additional $1,260. Now remember, this is only if the state permits voluntary contributions. If it permits voluntary contributions, then you can contribute an additional $1,260. Now, letter D says tax savings realized by the company taking into consideration the voluntary contribution made in C if the taxable payroll in 2023 is 980. So we are going to assume that we contributed that extra $1,260 in requirement C. Okay, so if we went ahead and we did that additional contribution, okay, then what would our tax savings be based on moving from a 4.9 to a 4.6? Okay, so let's run the numbers. Okay, so let's first start off with the tax without the voluntary contributions. Okay. If we had not contributed, we would have paid $980,000 as our average payroll, and we were at a rate of 4.9% originally. That is what we were originally paying. Okay, 980 is the new average payroll times 4.9% is our old rate. We would have paid $48,020 in SUTA. Okay, that is how much we would have contributed into our account. Okay, now let's do the tax with the voluntary contribution. Okay, if we contributed that additional $1,260, we would still pay taxes on the 980, but my rate would be 4.6%. Okay, I would be moving down to that other level, that other tier, the tier below. Okay, so if I were to put in 1,260, I would go down to that tier below at 4.6, and then I would have paid 980 times 4.6%, 45,080. That would have resulted in a tax decrease resulting from the voluntary contribution. If you subtract the 4820 from the 45080, that would have resulted in a reduction of $2,940 in contribution. Now let's deduct the amount of the voluntary contribution, because we had to put that money in. We had to pocket it out so our rate could drop. Okay, so we had to pay $1,260. Okay, so the actual tax savings realized would have been, yes, I would have had a decrease in my taxes of $2,950. But in order to get that reduction in taxes, I had to pocket out $1,260 to put into my reserve account. Even after putting into my reserve account, okay, an additional $1,260, that money is there available for me to use in case I have unemployment benefits that need to be paid out. All I'm doing is I'm contributing an additional amount. Okay, I would still realize a tax savings of $1,680 because now I'm at a lower tier. Okay? I went from being at a 4.9 to a 4.6, causing me a decrease of $2,940. Okay, my taxes, I'm going to deduct that voluntary contribution that I had to put in of $1,260. I am still left with tax savings realized of $1,680. Okay, so this is how the reserve ratio and the contribution rates are calculated. Okay, please read all of the information carefully. Make sure that you follow or use the correct tier. Okay, read carefully the information. That way you can analyze the information and select the correct contribution rate, and then be able from there, based on what the problem asks you to do, you can be able to move down or up to the different tiers. Okay, so this is problem 512A. Please make sure that you read over the section in your book that deals with the different experience rating system and the contribution rates, the reserve ratios, all of that. Okay, but it's important that we understand, first of all, where is it that we stand. We currently stand as an organization, and where do we want to be? And if we want to be there, how much more money do we have to put into the our reserve ratio account to be able to pay that less of a tax? Okay, and then you have to figure out, does it make sense? Am I going to have any actual tax savings by me doing this? In this case, yes, we're going to have tax savings of $1,680, already deducting that additional voluntary contribution that we had. Okay, so that is problem 512A for you. If you have questions or concerns, please reach out to me. And until next time, have a wonderful day.